All right, what's going on, family? Today we got people, or a couple of brokers, trying to suggest to us that Supermicro computer is an investable asset. Maybe you should come in and buy it. But here it is, Zacks.com. It's telling us to read this before placing a bet. What are they trying to say? Let's go. Investors often turn to recommendations made by Wall Street analysts before making a buy, sell, or hold decision. Now, for real, to those who just heard me say that, drop me a comment on this video and let me know, let the family know if you really listen or read what these Wall Street analysts have to say about their recommendations on the stock. If it's a buy, if it's a sell, if it's a hold, just let me know. Because maybe we need to do a poll. Because to me, I don't think a lot of people pay attention to these Wall Street analysts. I don't think so. Maybe back in the early days of the markets, yes, because they were on the inside. But with the advent of technology, with the internet, with social media, we are able to get a plethora of information from many different places. It doesn't have to come from the inside anymore. While media reports about rating changes by these brokerage firms employed or sell side analysts often affect a stock's price, do they really matter? I think Zacks know the answer. I think they know. Before we discuss the reliability of brokerage recommendations and how to use them to your advantage, let's see what these Wall Street heavyweights think about Supermicro computer. Heavyweights in the sense that they got a whole lot of money on Wall Street and they have a whole lot of assets under management. That is what makes them heavyweights. Not that their opinion is heavy, not that they're offering anything of value to the community. No, it's just that they got a lot of money to use at their disposal to make plays. So now, Supermicro currently has an average brokerage recommendation ABR of 1.83 on a scale of 1 to 5. Strong buy to strong sell. So they're sitting at about 1.83. That's pretty much around the strong buy area. Calculated based on the actual recommendations buy, hold, sell made by 12 brokerage firms. An ABR of 1.83 approximates between strong buy and buy. So we got 12 firms looking at SMI, SMCI, and they're saying it's a buy. Of the 12 recommendations that derive the current ABR, 8 of those brokerage firms are strong buy, representing 66.7% of all recommendations. While the ABR calls for buying Supermicro, it may not be wise to make an investment decision solely based on this information. Wait, hold up. Then what's the point of having the recommendation? What's the point of having the scale? Because these 12 brokerage firms should have done their due diligence before they came out with their ratings. Am I right or wrong? And according to what their due diligence has revealed to them, they said, all right, cool. Based off the information that we have. Now we're talking about 12. We're not talking about one. We're not talking about two. We're talking about 12 firms who pays attention to Supermicro computer. And out of the 12, 8 of them, 66.7% has a buy rating. So why should you not solely base your decision off of that? Let's see what the next sentence has to read. Several studies have shown limited to no success of brokerage recommendation in guiding investors to pick stocks with the best price increase potential. Several studies, not one, not two, which simply means to us that these brokerage firms get it wrong all the time. So yes, even though they may be heavyweights in pocket, but they have no weight when it comes to the recommendations. Are you wondering why? The vested interest of brokerage firms in a stock they cover often results in a strong positive bias of their analysts in rating it. Yeah. They have a keen focus to ensure that what they recommend doesn't impact the company itself, the company that they're covering. Could you imagine these Wall Street analysts? Let's say that they cover and they watch Apple, right? And let's say that every quarter, every 6 months, an analyst who works for an investment firm always has a sell rating for Apple. Do you think Apple would throw a couple of dollars their way so that they can invest? I don't think they would. So many of these Wall Street analysts are biased to their recommendations to ensure that the money can continue to flow from these massive companies into their accounts. In other words, their interests aren't always aligned with retail investors, rarely indicating where the price of a stock could actually be heading. Therefore, the best use of this information could be validating your own research or an indicator that has proven to be highly successful in predicting a stock's price movement. So now, given that we get that information, let's look at the stock price of SMCI. Here it is right here. From our idea that we produce on or around March the 20th, we've been looking for price in SMCI to go down. It hasn't. In fact, the only thing that I would say that we don't need to change our price prediction yet is right here on the 26th of March, to where the market got rejected off of our sell zone. That tells us that we're still sitting in a location that price could go lower, albeit the market went up first. So, is there still a chance for price in SMCI to go down? Yes, there's still a chance, but it's dwindling because of how price went up from out the gate. Okay, it would have been great for us to see the market in SMCI immediately go down, but it didn't do that. Here it is on the monthly chart. So you guys can see right here that the market for the month of March ended off of the highs, which simply shows that the market may be getting tired of going up. Here it is on the 5 weeks. Here it is on the 3. SMCI on the 2 weeks and on a weekly. Here it is on the 5. Now this right here on the 5 weekly chart just showed you how overextended the market is in SMCI, because when you get these indications of weakness and the market continues to go up, it tells you that there's a huge amount of demand in this stock right now. Like, people just throw everything out the window. They see price going up every day, so they're like, shoot, they forget it. Let me conclude my research and then just go out and buy the stock, because it is relentless. It is not going down. We are seeing instances to where price should be going lower, but it's not. It continues to go up. That is how you can tell you're out of rational levels of thinking logically. So will SMCI continue to go up? Because a lot of Wall Street analysts, we got saw on Zacks.com article that they're saying that the market is a buy. What would you do? To me, I think price is still looking to continue to trend down, but instead of it coming all the way down to like $690, it may just park up right here on this buy zone and then try to go higher from there. That's what I'm kind of seeing. So I'm not going to change my price prediction, but I'm paying attention to see, okay, because like I said, the market is asinine right now in terms of the demand. People just simply coming in and buying this stock right now. But how long do you think that's going to continue? Give me your thoughts. Make sure you maintain the profitability. And as always, trade different.